What if a single keystroke could just create $40 billion out of thin air? Well, that's exactly what happened. Today, on The Explainer, we're diving deep into how a simple typo at the Bithumb crypto exchange triggered a market crash and a massive government crackdown. Let's just start with the number, because it's almost hard to wrap your head around. $40 billion. That's the value of Bitcoin that Bithumb, one of South Korea's biggest crypto exchanges, accidentally sent to the accounts of just 695 people. And get this wasn't some sophisticated hack or a mastermind plot. Nope, this $40 billion catastrophe was caused by a simple clerical error, a single mistake that nearly broke a market and exposed a huge vulnerability at the heart of centralized exchanges. So here's how we're going to break this down. First, we'll look at the exact typo that lit the fuse. Then, we'll relive the 35 minutes of absolute chaos it caused. We'll get into this weird idea of ghost Bitcoin, see how regulators brought down the hammer, and finally, figure out the critical lesson this has for literally anyone involved in crypto. Okay, so this whole thing kicked off with something totally normal, a promotional campaign. It was February 6th, and all Bithumb wanted to do was send out a few small cash prizes to some lucky users. Simple, right? The plan was to send each person 2,000 Korean won, which is, worth about $1.50. But an employee processing the payouts made one tiny, disastrous mistake. Instead of typing won as the currency, they typed BTC. And just like that, 695 users didn't get $1, they each got 2,000 Bitcoin. We're talking over $130 million per person. That one typo unleashed 35 minutes of pure, unadulterated chaos. I mean, can you imagine seeing that kind of money suddenly appear in your account? Human nature took over, and Bithumb's entire market just went into a nosedive. The reaction was instant. Within minutes, people started selling off their newfound fortunes. This sudden flood of sell orders caused a flash crash, dragging the price of Bitcoin on Bithumb down by a whopping 17%. It took the exchange 35 excruciatingly long minutes to figure out what was happening and slam the brakes by freezing the accounts. But by then, a lot of damage had already been done. In that short window, 86 users had already sold or withdrawn almost 1,800 Bitcoin. Now, Bithumb managed to reverse most of the mistaken credits, but for a critical chunk, it was just too late. Somewhere between $9 and $13 million had already walked out the door. Okay, so this brings up a huge question. How on earth can an exchange send out $40 billion in Bitcoin that it doesn't even have? The answer is this really unsettling idea of ghost Bitcoin. This is where it gets truly wild. See, at the time, Bithumb only held around 46,000 Bitcoin in its reserves. But because of the typo, its internal system created ledger entries for 620,000 Bitcoin. That's 14 times more Bitcoin than it actually owned. Billions of dollars in phantom assets were just, poof, created out of nothing. Right, so these weren't real Bitcoin moving on the blockchain, not at all. They were just numbers in Bithumb's private database. The trading engine saw them as real, but they were basically IOUs with absolutely nothing to back them up. Regulators are now calling this the phantom coin issue, and it really shines a light on how these platforms actually operate behind the scenes. And look, if you're thinking this is just some weird crypto thing, think again. A nearly identical error happened in traditional finance back in 2018. Samsung Securities accidentally issued billions of ghost shares. It just goes to show you, any system that relies on a centralized internal ledger is vulnerable to this kind of catastrophic human error. As you can imagine, the response from South Korean regulators was, well, let's just say it was swift and it was severe, and it's probably going to rewrite the rulebook for crypto in that country. They didn't see this as a simple mistake. They saw it as a symptom of a deeply broken system. The head of South Korea's top financial watchdog, Lee Chan-jin, he did not mince words. He came right out and called this a structural problem. For the government, the idea that a single typo from one employee could almost bring down a major exchange was all the proof they needed that the industry was missing basic fundamental safeguards. So, the Financial Supervisory Service launched a full-scale crackdown. It started as an inspection of Bithumb and quickly blew up into a formal investigation of the whole industry. They've ordered audits of all exchanges, scheduled emergency hearings in Parliament, and they're fast-tracking new laws and even AI surveillance systems. The message couldn't be clearer. The Wild West days are over. Now, it's pretty remarkable that Bithumb recovered almost all of the funds, but honestly, that's not the real story here. This whole incident is a massive wake-up call for anyone who uses a crypto exchange, because it exposes a fundamental risk that most of us just kind of ignore. This is the key takeaway. The Bitcoin you see in your exchange account, it isn't technically your Bitcoin. It's an IOU. It's a promise from the exchange that the real asset is sitting safely in their reserves. And as this whole Bithumb mess proved, that promise can be a lot more fragile than we think. And this whole event? It's like the ultimate I told you so for people who advocate for self-custody. Their argument has always been simple. The only way to truly 100% own your digital assets is to hold the private keys yourself. It's all summed up in that famous crypto saying, not your keys, not your crypto. And it takes the risk of an exchange making an error like this completely off the table. So at the end of the day, the Bithumb saga really leaves every single one of us with a critical question. In this new world of digital finance, where do we actually place our trust? Do we trust the centralized, human-run systems with all their flaws and potential for error, the Clerk? Or do we trust the decentralized, automated protocols that can't be changed but demand a lot more personal responsibility, the code? This $40 billion typo forces us all to make a choice.